What's up, guys? TraderJud back with part 2 of the trading strategy video. If you haven't seen part 1, I do recommend that you go and watch part 1 before you watch part 2, or before you watch this video. Part 1 just goes into depth of what you need, what the setup is, explains kind of how it works. This video is primarily just going to be examples. Using 3 different charts, the EG, GA, and AJ will be the example charts. I will be giving examples on all 3 of the monthly, weekly, daily, 4-hour, 1 hour, 15 minutes, and 5-minute time frames. I will do that on all 3. So if you haven't figured out by now, this video is going to be long. It is going to be a longer video. I do recommend that you watch the whole thing. It will go into detail or show you a bunch of different examples of possible trading setups. And as you know, the past usually repeats itself, so you will see many setups like this on the charts that you trade using this method. So if you have any questions, comments, or concerns, go ahead and drop a comment in the comment section down below, or send me a message on Telegram. My Telegram contact information is in the description down below. If you've enjoyed part 1 and are looking forward to watching the rest of this video, hit that thumbs up button, like this video for me, subscribe to the channel if you haven't already subscribed to it, and if you have, I really greatly appreciate it. You are awesome. So let's go ahead and get started. We're on EG right now on the monthly time frame. We're going to start with the most recent time and move backwards. I'm going to try to do 5 examples on every chart. I've not pre-done this because I want to look through it real minute and show you examples as I come up with them. That way it's not pre-thought out. This is all going to be raw. This whole video is going to be unedited. So yeah, first example that I see on the monthly time frame is going to be the rejection of both of these EMAs. You'll notice that I've got the 10 to 20 and the 800. They're on the monthly time frame. There's not 800 candlesticks yet, so there's no 800 EMA. So the first example is going to be this bearish pin bar candle right here. We are going to set that at candlestick close. We're going to set our stop loss below that pin bar, slightly below the pin bar. We're going to change our take profit to 2 to 1, and as you can see, just barely hit, but it hit. So that's our first example. Next example is going to be off of this candlestick right here. This rejection of the 10 EMA. And I'm not going to do this as two examples, but instead I'm going to say that if you didn't get into that one, or if you wanted to stack an entry, you could also enter in off of this bearish candlestick with the rejection downward. We're going to set our stop loss again slightly below that wick, and we're going to set it for a 2 to 1, just like that. Next example, we're not going to use this as an example. Some of you may say, well, here's a prime opportunity to enter this bearish candlestick right here, but because the EMAs are crossing right there, we're not going to use that as an example. So the next example that I see going backwards, here's an example where you probably would have gotten stopped, or no, probably you would have gotten stopped out. So there's one loss. Your entry would have been here. Stop loss would have been below that. Set it for a 2 to 1. And as you can see, would have been stopped out pretty quickly. Next example is going to be this bearish engulfing candle right here. So we're going to set our stop loss above those wicks, set our take profit for a 2 to 1. There's that. And one more example The next example is going to be this bullish pin bar right here. You can see the EMAs cross and then spread out. That lets us know that there's a pretty good chance that this is going to continue bearish. We're going to set our entry right there. Same thing, set our stop loss above the wick, set our take profit 2 to 1. And there you go. So there's 5 examples. We have 1 loss and 4 take profits. First take profit would be 352 pips. Second one, 613 pips. Our loss is 394 pips, so we're about 100 pips up at this point. Next take profit, 493 pips. And our last take profit, 319. So that leaves us with just about 900 pips on just EG on the monthly time frame in 5 examples. So we're going to now delete these. If you haven't screenshotted this, or if you would like to screenshot this, back it up obviously about 10 seconds and screenshot that. Also, I didn't mention this and I meant to. You should definitely be going through this with me. So if you're on a computer and you're watching this video, I would recommend having either TradingView or MetaTrader 4, whatever trading platform you use, and go through this with me, right? See it for your own 2 eyes. Don't just watch the video. Also go through it. That will help a lot in the learning process. So EG on the weekly time frame is what we got next. Let's see here. So the EMAs are currently crossing. We might have a good setup in the next couple of weeks, maybe a few weeks, if this stays crossed and then retraces. Really no good entry points as of right now. You might have entered off of this. I'm going to explain a reason why I wouldn't have entered off of this bullish engulfing candle right here, though. And the reason is because of all of this consolidation area right here. Because the EMAs haven't really spread apart in either direction. And because this is just, to me, this looks like a retest of the consolidation area, I would not be entering off of that. So yeah, that's my reasoning for that. But this right here is kind of interesting. Well, that's in the wrong direction though. The 10 EMA is above the 20 EMA, so we're not entering off of any of these. So really, I guess our first good entry point on the weekly time frame is going to be not there. Huh. Still no good entry points. We're back a number of weeks now. Well, no, that's not one. Still no good entry points. Just because there's so much consolidation. I was gonna say maybe this this bearish engulfing candle where it hits the 10 EMA, but it actually doesn't hit the 10 EMA, so we're not looking at that. We'll have a few on this push up though. So you can see price breaks through the EMAs, goes up, goes up, goes up. Our first wick is going to be right here. So that's going to be our first entry on this pair. It is going to be a bullish entry, right? We have the rejection of the 10 EMA right there. Let's get our entry set up correctly. We're going to set our stop loss first. Sorry about my phone. And then we're going to set our take profit 2 to 1. So there's one right there. Our next one is, I wouldn't say off of that candlestick. I wouldn't say off of that candlestick either because the 800 EMA is right there. I guess our next entry is going to realistically be this bullish engulfing candle right here. This is going to be a pretty large stop loss. Set below that. We're going to set this 2 to 1. There's that. If you didn't get in on this bullish engulfing candlestick, the next entry would be off of this one. However, I probably wouldn't enter off of that because the stop loss is really, really large. So that's just me personally. I wouldn't make an entry off of that, but it does meet all of the requirements. The next entry is going to be this bullish candlestick right here. Also going bullish. Same thing, set our stop loss below the wick, set our take profit 2 to 1. Just like that. Alright, so we're good there. Gotta keep going backwards, keep going backwards. Alright, we got multiple opportunities for entries along this little push down right here. We have to well, we've identified that this is obviously going bearish, right? This whole movement down is all bearish. There's a lot of points of entry along this push down. So the way that we're going to do this is they're all going to be short entries. We will, I guess we'll just start at the bottom. The bottom one, I'm going to let you know that the very top of a bullish move and the very bottom of a bearish move will be the part that you get stopped out on. That's just the way that this strategy works, right? So this one will end up getting stopped out on. This would have been the last trade you would have taken. So there's your only losing trade on this part. So let's see here. Your first entry would have been this pin bar, this bearish engulfing, or this bullish engulfing. Either one of those would have been fine. We'll do it off the bearish. That'll be the conservative entry, so we'll do that one. Above the pin bars, set this 2 to 1. Dang, you would have got stopped out on that one too. Just barely, but it would have happened. So there's 2 losses in a row based off of this strategy. Let's go ahead and go to the next entry. And you'll be saying to yourself now probably that you know, there's 2 losses on this. You know, I'm second guessing it. Here's going to be probably a 3rd loss. Oh man, I'm really second guessing this strategy now. In which case, like, that's fine. I mean, you can second guess it. I don't have any issues with that. If you would have taken let's show the aggressive entry. So that would have been the conservative entry. The aggressive entry would have been this bullish engulfing candle because it didn't break through the EMAs. The only time that you would have not wanted to do this was if it would have broken through the EMAs. We're going to set a realistic stop loss on this, not above the candlestick, because that's not realistic, right? We're on the weekly time frame. 42 pip stop loss is not realistic on the weekly time frame. Let's shoot for 120, maybe 115. All right, so that sets our take profit 2 to 1. There's a take profit. Same thing with this. You could have taken the aggressive entry on this bullish candlestick instead of the bearish one, and that would have also hit take profit, I do believe. Well, let's check it out. Let's see. Move that there. Set it 2 to 1. Yeah. That would have also hit take profit if you would have done it the aggressive way instead of the, I guess, the relaxed way, if you will. Next entry is going to be based off of this bullish candlestick rejecting the 10 EMA. You'll notice that I'm doing more entries on the weekly time frame. It's just because of the way that this is set up. This is a kind of an ideal setup for this trading strategy, and so I want you guys to get the full effect of why this is so powerful. So there's take profit, take profit, take profit. There's your loss. So now instead of drawing all these out, I'm going to say that this is super powerful because of the way that your entries work, right? You can take an entry off of every single one of these rejections of the 10 EMA, take an entry off of it. So you wouldn't enter off of this bullish engulfing candle. You would enter off of this bearish candlestick, however, and then you would enter again off of this bearish engulfing candlestick, and then you could enter again off of this bearish engulfing candlestick. All of a sudden, you have 3 entries in the same month that all 3 would hit take profit down here. Same thing with if you look up here. So the EMAs haven't really spread out yet, so I wouldn't enter off of either one of these. However, I would enter off of this, right? Take profits, or I mean stop loss set above the EMAs and above that pin bar level. Take profit 2 to 1. You would also enter on this bearish engulfing candle right here. You can enter off of each one of these wick rejections. You could enter off of this bearish engulfing candlestick. However, that one might get stopped out depending on where you put your stop loss at. You would definitely enter off of this bearish engulfing candle, and you could enter again off of any one of these wicks to the 10 EMA. So there's the weekly on EG. Obviously, not a whole lot of entry opportunities over here. You'd want to go in the past, I don't know, year or so. You'd want to look at other time frames or other pairs for the weekly. But the farther back you go, you can definitely see some trading opportunities from week to week on EG. Dropping down to the daily. Let's see here. Get my chart set up. Alright. So you can see the EMAs are spread out. We got this bullish engulfing candle that broke through, but the EMAs never did come back together. And so where we're going to enter is one of these candlesticks right here, or one of these 3 right here. You can take an entry off of any of those. We'll take an entry off of the most recent one. So set our stop loss above our previous. Set our take profit 2 to 1. There you go. I guess we'll line this up a little bit better than that. Still. So there you go. That would have just hit take profit today. That's example number 1. I guess this would have been example number 2. Maybe this one would have gotten stopped out. So, like I said, this is not a 100% trading strategy, right? You are going to take losses on this. The reason why I stress the 2 to 1 risk to reward ratio being extremely important is because without that, you would, if you took a loss, your losses could be substantial, and they could be more than what your take profits are going to be, or whatever. But this protects you. So this one you would have got stopped out on because of that bullish engulfing candle, and your loss would have been 52 pips. But the next trade that you got using this, you would have net 123.3 pips. And so you still would have made 75 pips, and this is within 10 days on one pair. Alright, so our next trade opportunity, the EMA is spread out. We get this bearish candlestick that comes in and rejects. So we can enter in off of either one of these, really. If you wanted to be safe, you would enter in off of this bullish engulfing candle. That's what we're putting our entry at. Stop loss below. Take profit 2 to 1. And there you go. There's another take profit hit. Next entry would be either this bullish engulfing candle or one of these bullish candles. If you wanted to set this up to where the take profit and the stop losses are more methodical, you could go like the base of these, the base of the wick to the left, plus like 10 pips, 15 pips, something like that. If you went 10 pips, how much was that? 47, so that would have been 57. You would have just barely got stopped out. If you went 15 pips, then you would have been fine in that, and your 2 to 1 would have still been hit. So that's kind of up to you guys. I'll let you decide how you'd want to do that. Whether you'd want to set set at 5 pips, set at 10 pips, set at 15 pips. This is very time frame dependent, so obviously on the larger time frames, it's going to be more pips, and on the smaller time frames it'll be less pips. But you always want to set your stop loss based off of the EMAs, or in this case this bullish movement right here. We're setting it up based off of the EMAs or based off of the most recent market structure to the left, which in this case is going to be this wick right here. And so you always want it to be more than that. You don't ever want it to be equal to, because it might come back and retest that. So you always want it to be more. Decide if it's going to be 10, 15, 5, whatever you want it to be is fine. Just know that the farther out you make your stop loss, the farther your take profit has to go. So in this case, this is our stop loss is based off of entry plus whatever the distance between this, the entry point, and this wick is, plus however many pips you want as a cushion, 5, 10, 15, somewhere around there for the daily time frame is adequate. Alright, pushing to the left, all of this is consolidation. We don't trade based off of that. Farther to the left, we have the EMA's cross right here. This is our retest right there. We are going to get into a short based off of that retest. A rejection. There's that. Set our take profit 2 to 1. There's that. So there's that. More of just consolidation, really. Nothing really good to enter off of there. I guess we could enter off of this bullish candlestick right here for a short. So this bullish candlestick comes in, rejects the 20 EMA, and is currently closed above the EMA. That's okay. There's that. Let's see. I mean, that just barely hits take profit. I mean, just barely smudges it, but it did hit. Let's see here. None of this is really good for entries. No significant movement right here, even though you do get the EMAs to spread out a little bit, but because there's no real significant movement, I wouldn't enter on any of that. That doesn't touch, so that's not good. Here's a good opportunity though. So this is, for those of you that haven't figured out by now, this is the type of setups that we're looking for. We're looking for significant movements in either direction. We're not looking to trade stuff like this. You want significant movements. You do not want consolidation areas. So this little area right here where it just is barely going up and down, and the EMAs aren't really decisive on either direction, that's not what we're looking for. We're looking for situations like this where the EMAs cross, they spread way out, and they stay spread for a long period of time. That's what we want to see going forward. So our first opportunity to trade this would be, so the EMAs cross, they spread apart, this candlestick comes down but doesn't reject, so we're not entering in off of that because it's a bearish engulfing candle. We're looking for bullish entries. The next candlestick is always also bearish. No rejection, right? No wicks, so we're not entering in off of that. We're not entering in off of this bullish engulfing candle right here because it's too significant. Our stop loss would be too large to enter in off of that, so we're not going to enter in off of that. So what we're looking for now, we could enter in off of this bullish engulfing candle right here. That would be still a pretty large stop loss, but you could realistically enter in off of that. We're going to set our stop loss. We'll set it for an even 100 pips. Set our take profit 2 to 1. There's your first entry on this large push up. Obviously that would have taken a number of days, about 2 weeks, and you would have been in the loss category for a while, but you still would have hit take profit. You wouldn't have hit, your stop loss would not have been hit, and you have an opportunity to take multiple entries based off of this first entry as well. Any one of these wicks right here, you could have taken entry on. This bullish engulfing candle right here, you could have taken an entry on. I'm just going to scoot this over so we can see this bullish candlestick right here. You could have taken entry on. You could have taken an entry off of this bullish engulfing candlestick, but because it closed so far away from the EMA, I would not have done that. Not entering off of that, not entering in off of that, not entering in off of that. Obviously, it's below the EMAs. And that's the end of a week. That's Friday. So this is Monday's candlestick, comes back and is in the EMAs, comes back, breaks through the EMAs. You get the slight pullback, which is a retest of the EMAs. Next bullish engulfing candle. I really probably would not have entered in any of those. However, I would be entering in on this, either this pin bar right here or this pin bar right here, or any of these candlesticks over here. I would have entered in on any of those because of the rejections downward. Same thing with this one. Would have entered in. I would have entered off of that. I would have entered it off of that. And that would have been the end of entries to this point. You're not going to enter in off of this candlestick because it's not significant next to this bearish engulfing candlestick. And then obviously you have this bearish engulfing candlestick right here, and then right after that the EMA's cross. That's the end of the bullish run. We're not looking for bullish opportunities right now. After this cross happens, we stop looking for buys. And if a sell opportunity presents itself because the EMAs are spread pretty far, I would look for that. That's an aggressive trading style. The reason why I say it's aggressive is because this is the previous low, and this is the next low. This is a lower or a higher low, excuse me. And so we'd be looking for structure to continue bullish. But you could look for sell opportunities based on how far the EMAs are apart. Let's see here. Is that 5? No, it's more than 5. So there's some good opportunities with EG on the daily. Let's see here. Get rid of these and drop down to the 4-hour time frame. Reset this chart. All right. Now, I will say that I don't typically trade the daily, the weekly, or the monthly using this method. I just wanted to point out that you can use them, and that's the reason why they are there. I do trade this on the 4-hour time frame, and I do also enjoy scalping with this method either on the 15 or the 5-minute time frame. So our first opportunity to enter is going to be this wick right here. It's going to be for a short on the 4-hour time frame. Our entry is going to be at the end of the candlestick close. Stop loss is going to be slightly above, we'll say 30 pips. Take profit 2 to 1. And just barely got hit, but it did get hit. Now there's our first trade. Beautiful trade. Next trading opportunity will be either one of these wicks right here. Entry. Stop loss, we'll put it slightly above the 800 EMA. Take profit 2 to 1. There you go. Another easy trade. Nothing hard about that. Next opportunity. I wouldn't take any of these trades right here. And this is why I keep the 800 EMA on my charts. I wouldn't take any of these wicks right here because this is the 800 EMA. And price reacts pretty strongly to the 800 EMA on every time frame. And so because we'd be looking for bullish entries off, or yeah, well, no, we'd be looking for bearish entries, excuse me, off of the rejection of the EMAs. I would wait for price to break below this 800, which you saw with these two entries over here. Waited for price to break below the 800 EMA on the 4-hour time frame before I'd be taking entries. So all of these bearish possible entries right here, I would not be taking because of the 800 EMA. Same thing over here, right, where price is currently sitting on the 800 EMA. Would not be looking for potential entries based off of that. Let's see here. Keep moving to the left. Our next opportunity would be this candlestick right here. So it clearly rejects both the EMAs. Enter in off the candlestick close. So stop loss 15 pips. Take profit 2 to 1. Easy. That probably only took an hour. Alright. So next opportunity be based off of this bullish pin bar right here. any one of these bullish pin bars really would have been opportunities to enter, but we'll take it off of the first one right there. Stop loss, say 25 pips. I don't know if this hits or not, and it ends up not hitting. So there's, you would have taken a loss on that, just barely, but would have been a loss. So that's unfortunate. All right. Let's see here. This would have been your next entry, right? This pin bar right here. This unfortunately also looks like it is going to be a loss. Yep. So there's 2 losses in a row. However, here's a good opportunity for trading right here. Like I said, this is the type of stuff that you're looking for. Extended periods of time where the EMAs stay apart, spread out. So I'm going to show the trading opportunities for each one of these. First one would have been right here. All right, set that for 2 to 1. There's your first opportunity. Next one would have been, which we're going to leave this so that you guys can see each opportunity. Next one would have been off of this bullish engulfing candle. We're going to set the stop loss below the previous wick. Set the take profit 2 to 1. Right there. There's your second entry. Next entry would have either been off of this bullish engulfing, bullish candlestick with a large wick down, or this bullish engulfing candlestick right here. Either one would have been fine. So there's your, we'll just do this one for simplicity. Or I guess we could do both of them since I'm doing it the way that I am now. Set this 2 to 1. Boom. Next one would have been this bullish engulfing candlestick. Set your stop loss below the EMAs and below the wicks. Set your take profit 2 to 1. There's your fourth entry. Your next entry would have been probably based off of this bullish candlestick because it engulfs this bearish one. So boom. Set it below the EMAs and below previous market structure. Set it for 2 to 1. There you go. Next entry would have been based off of this rejection right here. Set it below. Set your take profit 2 to 1. It won't let me go exactly 2.0, so 2.01, close enough. Next one, I guess it would have been this one. We'll see if that one hits or not. I have a hard time taking entries based off of large bullish or bearish engulfing candles. Not saying that you can't do it, I just have a hard time doing it, especially when there's no wick to the downside. But we'll do it and see if it hits, which it's not going to. So that would have been your last trade for this this movement upward. You would have made 56 plus 53 plus 57 plus 48 plus 30 plus 46 minus 32. Oh, that's about 300 or 400 pips on that movement right there, and that would have been all in the same week, or round about all the same week. So there's more than just one example on the 4-hour time frame, but like I said, I like to primarily trade the 4-hour time frame for this, so that's why I want a little bit more. Dropping down to the I'm going to skip the 1 hour because this is already past 30 minutes, and I'm going to go down to the 15, and then I'll do the 5 as well, but I want to show you some lower time frames. The 1 hour and the 4 hour act a lot alike, so you're going to have a lot of the same sort of opportunities on the 1 hour that you would on the 4 hour. That's just the way that it works. All right, so our first entry, this is on the 15-minute time frame. Why won't it let me do this? Oh, let me zoom in. Okay. First entry would have been for a short. It would have been based off of that tap of the 10 EMA. Set our stop loss right at the 20 EMA. Set our take profit 2 to 1, which it just barely missed. That's unfortunate. With this, I would have exited after this bullish engulfing candle right here. Let me make sure that this is entered correctly and the stop loss is set correctly. So yeah, this one would have been extremely dependent on exactly where your entry was, exactly where you set your take profit at, and then doubled your stop loss to set your take profit. So this could have been depending on exactly where your entry was, and depending on the spread of your broker, stuff like that. This one either was a very, very close loss or a very, very close take profit, one or the other. All right, our next opportunity would have been, it looks like this probably would have been our next opportunity. This short right here. Stop loss. We'll go 10 pips. And I'll explain why I'm setting this for 10 pips. Set this for 10 pips because the wick, even though it rejected the 10 EMA, the EMAs are extremely spread out right now, and you expect price to go at least to try to retest the 20 EMA as well, and we don't want the next candlestick to come up and retest the 20 EMA and stop us out. And so we'd either want to set this for above the 20 EMA at entry, or at least significantly or a significant amount above the wick of that candlestick. So you want it to be at least in between the two EMAs and a pretty significant amount above this wick, which on the 15-minute time frame, that's literally 4 or 5 more pips. We'll set our take profit 2 to 1, and you can see that it would not have been hit, but our stop loss still has not been hit either. So that would still be an active trade, which is kind of funny. But so if you took that trade, you'd still be in it. Next trade, or the previous trade, I guess, would be based off of this bearish engulfing candle, set it above the wick. So you take profit 2 to 1. There's that. Next one would have been based off of this rejection right here. That small little doji, or spinning top, however you want to call it. So that would have been our stop loss. Take profit would have been there. And you would have just barely gotten stopped out of that. That's only a 5 pips loss, not a big deal. At least it shouldn't be if you're using proper risk-reward ratios. Next entry, or I guess the previous entry, would not enter based off of this because the EMAs are too close. I might enter based off of this because the EMAs are pretty spread, and that's a bearish engulfing candle. That would really depend on how I felt at that moment in time, though. Alright, stop loss, we'll go 5 pips, take profit 10 pips. If you like scalping, if you prefer scalping, this is a great method for scalping. You open up 10 different charts, set them all on 15-minute time frames, set your EMAs, and just watch them. You can do this for 3 hours a day, 4 hours a day. You'll get probably 30 or 40 different opportunities, looking at the 5-minute or the 15-minute time frame. Specifically the 5-minute. If you're only going to set 3 or 4 hours a day to do this, you're going to want to look at the 5-minute time frame. You will see multiple opportunities. As long as you take majority of them, I promise you, you might take 10 losses, but out of 40 trades, you'll still hit 30 take profits, and your take profits will have been double what your stop losses are. So based on that, you'll walk away with a significant amount of profit on a daily basis. I think that's probably more than 5. Well, that is 5 opportunities. One of them still open. This one, depending on where you put your stop loss and take profit and where your entry was at, you either would have barely got stopped out or you would have barely hit take profit. So we're not going to count that one. Like I said, this one's still open. It's still an active trade. This one, 24 pip take profit. This one, you got stopped out for 5 pips, so you're looking at 19 pips profit. This one you hit 10 pips, so that's 29 pips. And yeah, so 29 pip profit on this. This was all from today, so these would all be opportunities from today or within the past 24 hours, let's say. We're going to go ahead and remove all of those. Drop down to the 5-minute time frame, and we'll look at this as well. So our first opportunity, which if I had my broker window open, I would probably enter this, or I probably would have entered this. I'm not going to enter it now, but here's your first opportunity. Obviously, we're not going to know if we'll set 3 pip stop loss, 6 pip take profit. So something to keep in mind with this is you will want to do this on more volatile pairs, and you'll want to trade specifically if you're doing it on the 5-minute time frame. You will want to do this during more volatile trading times. So something like the New York session or the London session would be appropriate for this. Sometimes you can do it late in the Asian, right? But obviously you're not going to want to do this at 12 noon Central Time or Eastern Time, right? No 4 o'clock trading on the Eastern or Central Time zones because it's just there's not a lot of validity during that time. There's not a lot of movement, and so it just doesn't make much sense to trade that, especially if you're trading a pair like AU. It's not going to move much, so you're going to be sitting there watching paint dry pretty much. So all of this right here, I guess our next entry could have been any of these rejections right here. We'll get in on the first rejection because that's probably what we would have seen, is that first rejection of the EMAs right there. So that would have been our entry. Set our stop loss above the EMAs. Set your take profit 2 to 1. Here's your first take profit. Now given that's literally a take profit of almost 4 pips, so that's not a high validity trading time right now. This just really is case in point to what I'm talking about. This would have happened at 1 p.m. my time, would have hit take profit at 2:20. Just not a time that you should be trading anyways. Let's see here. Probably would not have entered in any of this. That wick's too large to set a realistic take profit, so I wouldn't have entered in off of that. No entries off of this. The EMA is just bouncing back and forth. That's not a good opportunity to trade. No retest on that. That bearish engulfing candle would have stopped me from entering. Nothing really good over here either. Nothing good there. Nothing good there. That's where the EMAs cross, so you wouldn't have entered in on that bullish engulfing candle. So I guess our next good entry points would have been 2 bearish entries. One right there, and then another one. Well, we'll set this first one first. Oops. First one would have been right here. Let's go 4 pip stop loss to an 8 pip take profit. So yeah, there's your first trade. Your next one would have been based off of this bearish rejection of the EMAs. Take profit. Let's go 3.5 pips. Stop, or 3.5 pip stop loss. Take profit 2 to 1. There you go. There's your next one. Now these seem like small victories, right? We're trading on the 5-minute time frame, which I don't know why a lot of people like trading, like scalping, right? You want to over leverage the crap out of your account and make a whole bunch of money in 20 minutes or 30 minutes or whatever. That's not exactly what I would recommend doing. It's a lot more laid back if you trade the higher time frames, right? You don't have to worry nearly as much, and you shouldn't be over leveraging your accounts regardless. That's just not smart. It's not a smart practice. So if that's what you're doing, you got to be careful. So you'll notice right here, EMA is just bouncing around. Not a lot of movement. Not a lot of movement. Would not have entered off of that. The candlestick is way too large compared to everything else around it, so definitely not entering off of that. Besides, the EMAs are really close together still. EMAs are really close together all the way through. So our next, I guess, real movement downward would have been, started with this bearish engulfing candle. We wouldn't have entered off of that. We could have taken an entry off of this one, however. So the EMAs are clearly spread. 6.5 pips stop loss for a 13 pip take profit. That would have been easily obtained. The next one would have been off of that bearish rejection, which is right in the center of this trade. So that would have been your next entry. Your next entry would have been probably either based off of this one, which if you entered off of that, you would have got stopped out, which we'll show that just because. That would have been your next entry right there. All right. Now, this is where it's kind of difficult to judge where to put your stop loss because the EMAs are so spread out. Obviously, you're not wanting to put your stop loss at 10 pips because that's just not realistic stop loss on the 5-minute time frame. For EG, at least it's not. So we don't want to set it for 10 or 11 pips. Probably where I would have set this is above these 2 wicks over here. Set your take profit 2 to 1. So there's that. And obviously you would have got stopped out pretty immediately. Your next entry, which that's a 6 pip stop loss, so you would have lost 6 pips on that. Next entry would have been based off of this. We'll go 7.5 pip stop loss on that. 14 pip or 15 pips take profit rather. All right, let's see. Does this run for a very long time? Yes, it does. But you still would have hit. So that, even though that took hours, you still would have hit your take profit based on that. So this is, let's see here, 13 pip take profit hit, 6.5 pip stop loss hit, 15 pip take profit hit. This was 7.5 pip take profit, 7 pip take profit. Both of those would have hit. This is a 3.5 pip take profit that would have hit, and this one is currently active, so we won't count that. So out of these on the 5-minute time frame, you have 1, 2, 3, 4, 5, 6, 7, 6. Yeah, 6 or 7 trades with 1 loss, and the rest take profits. So you still would have profited very well on the 5-minute time frame, even though you still took that loss. So you should hopefully by now, this is approaching 50 minutes now, so I'm not going to go into GA and AJ. If you want me to make this video, if you've made it all the way to the end of this, if you want me to make one for GA and one for AJ, please leave me a comment in the comment section down below and let me know that you want me to make examples out of both of those videos. Just so you know, I didn't know how long this video was going to be, but I knew it was going to be long. So we're sitting at 50 minutes almost exactly right now. So let me know if you want me to make more videos like this that show examples for the trades that you should be looking for with that strategy that I posted yesterday, or the part 1 of this video if you're not watching it the day that I post it. Let me know if you want more examples of this. I can definitely provide more examples. You should be able to see by now that this is about a 75% of your trades will hit take profit, about 25 to 30% will hit stop loss. But because we're using good risk management, our losses are significantly less than what our take profits are. So this is by far a profitable trading strategy. If you haven't watched video number 1 and you made it all the way to the end of this video, I applaud you, because you probably have no idea what I'm talking about, and I definitely recommend that you go check out video number 1. I will try to leave that at the end of the video, or somewhere. You should be able to click somewhere to access video number 1. But that's it for me, guys. Like I said, if you want more examples of how this trading strategy works on other pairs, please leave a comment down below that says what pairs you want to see, and I will make it happen. So without anything else, I don't think I've covered everything else. If you like this, please subscribe to the channel, share this with your friends, and anybody else that you know that enjoys trading, because it'll definitely help people become more profitable. So that's it. I hope you guys enjoy the rest of your day. I am out.